Welcome to the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Hey, not having a clear plan is the enemy. Using a proven tax deferral strategy such as the Deferred Sales Trust is the best way for you to sell your cryptocurrency, primary home, business, save a failed 1031 exchange, all tax deferred so you can create and preserve more wealth. So we're talking about timing your deferred sales trust transaction in this video. So is it important to make sure that you have proper planning and timing for your deferred sales transaction? The answer is yes. And so let's talk about a recent deal that we're working on right now for a gentleman out of Colorado. He's selling a business and he's selling real estate. And for business, it's different than real estate for the timing on the first leg of the opportunity to close your deferred sales trust transaction. In fact, for businesses, cryptocurrency, primary homes, for anything that's not investment real estate, we need to have the deferred sales trust set up before the buyer removes contingencies. Okay, so very important that we establish the trust and actually insert the language into the document, purchase and sale agreement, before the buyer removes all contingencies. Why is that? Well, it's the understanding of what's called actual and constructive receipt, which basically states that if the deal has gone too far and the buyer has essentially agreed to all terms and is ready to purchase it from you, the seller, that entity that which you're selling, that means you basically have received the cash, even though the cash still may be physically sitting in escrow and you haven't received them in your personal bank account yet. Even in that window there, that's considered constructive receipt. So prior to that, we need to have formed the trust and set up everything before that transfer takes place. So it's vitally important that you pre-plan and you start early. Okay. Now let's imagine you are also selling investment real estate, like this particular potential client is doing as well. There's another window. What if the funds are sent to a qualified intermediary? The qualified intermediary by nature also helps you to avoid taking constructive or actual receipt because the cash has been sent to a third-party qualified intermediary. That's their purpose, is to keep the funds until you perfect a 1031 exchange. Okay, so when's the next window? Well, the next window would be on day 45, essentially, of the exchange, if you haven't identified any properties. And if you're working with a qualified intermediary with language that has been put into the exchange agreement to accommodate. Okay, so we definitely recommend you get with us, and we'll give you a list of qualified intermediaries that you can choose from that are familiar with the deferred sales trust, and allow that. By the way, not to be confused with the Delaware Statutory Trust, right? Which is just another form of a 1031 exchange. So the question to ask your accommodator is, do you allow the deferred sales trust, the Delaware Statutory Trust, and the 1031 exchange, or are you just allowing the 1031 exchange with the Delaware? And if so, we recommend that you go with another qualified intermediary. If they don't offer all three, that you go with one who does. Okay, so that is the second window. The last window would be about day 181. So let's imagine that you've identified some properties. Maybe you've purchased one or two, or you've purchased none, but none of them worked out. We can essentially save or rescue a failed 1031 exchange. Now, it hasn't technically failed yet because the funds are still with the accommodator. And so we want to look at those specifics. But essentially, if we have the trust language in place, ready to go, the trust ready to go, we can have the funds sent to the deferred sales trust. So those are the three windows. Those are the timing. Of course, you can go to capitalgainstaxsolutions.com to learn more about this strategy, of course, and your options. That's capitalgainstaxsolutions.com. Hey, appreciate you listening to this short episode, this short video. Please rate, review, subscribe, and share this with somebody. As always, we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way for you to sell highly appreciated assets, defer your tax, and create a wealth plan to help you achieve transformation. So, by the way, we also have a mastermind every Friday now. Every Friday, 10 a.m., except for holidays, where we are discussing the Deferred Sales Trust and answering questions live. And typically somewhere between 5, 6 to up to 20 people on the calls, and so you are welcome to attend that as well. Again, thanks so much for listening, and reach out to us here at capitalgainstaxsolutions.com. Bye now.